Hey all, welcome to ShareTreck. This is Raj here. Friends, what a change has happened in the market. We have seen 2 days in which the volatility has gone up significantly. So I think the story seems to be that there is some kind of sectoral rotation happening. And I also think small caps are starting to show a lot of gains. They were languishing before, and with the September rate cut around the corner, I think that kind of makes sense. So then the question is, what do we do now? How do we reposition ourselves? So that's what I have been asking myself, and I'm trying to find some answers. Let's go to the TradingView platform and see where we are today and what it's looking like. Here we are in the TradingView platform, and we are looking at Nasdaq futures. And as you can see, we had a bearish divergence, and that bearish divergence is trying to resolve itself, and that's the reason why Nasdaq is falling. And also one more thing that we can see is that was the Nasdaq futures that we had there. Now, if you go into indicators and look at Nasdaq itself, you have the same story here, and the bearish divergence is being resolved out here. Nasdaq is down today, and so is QQQ, which is a proxy that we are generally using, again trying to resolve the bearish divergence out here. MACD is also bearish, and momentum is starting to fall, even though it's quite high. So I don't think the positive story is over yet. If you go over and look at IWM, you can see that it has been jumping up with leaps and bounds every day, and that is where the money is going in. And if you were to also look at S&P 500, it's also looking positive, so I don't give up hope altogether. Now, if you were to look at the stock market heat map, you can see the rotation has happened out of the MAG 5, MAG 6 or MAG 7, what you may call it. It's all gone into other areas of the market, and more so in the small caps, and that's the reason why we see IWM going up so much. You'll also see that gold is going up because anticipated rate cuts are coming through. Inflation is going down. So overall, this is what I'm seeing in the market. And I think that the volatility is also quite high. The volatility picked up. We have a double bottom out here, so there's a good chance that volatility can pick up. Now, if I was to use the same kind of measures that I use elsewhere for double bottoms, then if the double bottom were to form, that is, if we had one more day of candle going up here, then the double bottom would have formed, and then we would have a target. Just going to change the color here so I can see it clearly. Then we are aiming to see the wick close to 15.73. And last time we were around 15.73. I don't think the market was so high. So we should be prepared that there's a possibility that there could be further drop in the MAG 5 or MAG 6. And the interesting part is that the stocks which did not show much of movement when the MAG 5 and MAG 6 were powering the market with the AI buzz, those stocks are likely to pick up some value and keep the index up. So we won't actually feel the drop in the index as much as we would have felt if all the stocks were going down simultaneously. So that's what I am thinking. You look at the momentum, it's pretty healthy, though flat for the VIX, and the MACD is also bullish. So I suspect that momentum is going to play the spoiler going forward. And next, I'm going to have a quick look at genomics, the standard stocks that we follow. So you look at Tesla. Tesla is still positive. It's struggling to overcome 255.91, which happens to be the resistance for today. And I don't know if it can break through, but it's definitely getting support from the 9-day exponential moving average. Momentum is pretty good. MACD is weakening. It's slowly moving towards the signal line to cross to the bearish side. That is the weak point for Tesla right now. And if you look at FNGU, it's dropped 2% approximately. That's around $10. Yes, I'm still invested in FNGU and I'm at a loss right now. I'm also invested in FNGD in a different account that is positive at this point of time. But I'm not going to dollar cost average right now because I'm not sure whether FNGU is going to go back up again in the near future or it's going to keep on going down for a week or so. If you look at Microsoft, it's already changed the direction. The bearish divergence has taken place and it has resolved itself. So if I draw a line out here, you will be able to see. You'll be able to see that they're almost the same kind of slope. Palantir is down 0.56, but I see a lot of opportunity for Palantir to come down further. It's still got a bearish divergence out here, which has to be resolved. MACD is moving towards the signal line. So I think a few more days of losses, and we already have the 9-day exponential supporting the price line. So I hope that it will continue for the next few days. And there's plenty of momentum left. Momentum is pretty strong for Palantir. Next, let us look at Amazon. It's up 0.25%. And Amazon has got a bearish divergence, and it is trying to resolve it, but it's not quite done so. MACD is bearish. Momentum is still above average. So we'll see what happens for the rest of the day. But fundamentally, I think Amazon is a pretty good stock and it should do well. So it won't stay down for too long. This could be a potential buying opportunity. That's my personal opinion, not financial advice. Meta is down 1.69%. I think it has resolved its divergence. I'm going to take off the bearish divergence out here, and I'm going to replace that with a new one and see if we have a resolution here. So it seems that we have resolved the divergence. So right now, I think we have to look at other indicators to see where Meta will move. So I'm going to go here and look at my exponential moving average to see if I get any clues. I don't seem to get any clues out here with exponential moving average. We have a support here at 483.83. And then after that, we have a support of the 100-day exponential moving average, which is at 475.50. So that's the next level of support. Momentum is below average and MACD is absolutely bearish. So I think that if we don't get supported by 483.83, then we are coming down to 475.40, which is the exponential moving average for 100 days. And we'll take it from there. Apple is down minus 0.35, and Apple also has a divergence, bearish divergence. MACD is moving towards the signal line, ready to cross over to the bearish side, but momentum is pretty high. So let us see what happens. We'll watch what happens tomorrow. All the exponential moving averages are in the right sequence. So overall, I'm feeling confident about Apple. We'll have to wait and see. Google was down 1.18%. And again, all the exponential moving averages are in the right order. But we have a situation where the 9-day exponential moving average no longer supports the price for Google. MACD is bearish. Momentum is just above average. And it's moving in the wrong direction. And we have the 20-day exponential moving average providing support. So we need to have some positive catalyst to keep the party going. I don't know if it's going to arrive or not. Again, like Amazon, I think Google is also a great stock. It did not move up as much as the others did when they had a rally. And it's also an AI play. So I'm still optimistic about Google. Let us look at ARM. ARM is still trying to resolve its bearish divergence. It has got a slope out here and another slope out here, but I think it is... let me just check what is happening here. Let me remove the old divergences and then put the new one. So we have got 4 days worth of data. So I'm going to try and track and see. So we still have a divergence out here, but it's more of a bearish divergence. So I think ARM is going to turn around. And if I was to look at it from the point of view of being a bullish pennant, I think we are most likely to break out on the upside tomorrow. Again, this is my personal opinion, not financial advice. I think ARM can move up tomorrow. I personally would like to try and put some money on ARM if I had it. Then we have, so that's about it for our coverage today for the AI and tech stocks. But I think I'll also like to talk about NVIDIA because it is the star of the show and we haven't spoken about NVIDIA in a while. I'm looking at the charts here. One thing I'm happy about is that all the exponential moving averages are in the proper sequence. The thing I'm unhappy about is that it's fallen below the 9-day exponential moving average. So that is a problem out there. The second problem we have is that momentum is dropping, but fortunately it's still above average, but it's moving in the wrong direction. MACD is bearish and moving away from the signal line. And I would like to take the opportunity to draw a channel out here, which has been supported by 3 points. So this is my bullish channel out here. I'm going to put it here as a placeholder to see if the bullish channel holds. If the bullish channel holds, then tomorrow we are likely to see a positive outcome for Nvidia, and I might adjust this later on today when the market closes a little bit below or above, because there are small wicks out here. So instead of being 3 touch point, it could also end up being 2 touch point, where the slope could be slightly different. So I'm going to try all those things and see which slope works better. And if it goes along this bullish channel, then we have the hope that AI is still going to pull through. And we have the earnings coming up on 15th of August, so which is almost a month away. And again, if you look at this, it forms a bullish pennant. So all those factors point towards it going up, whereas MACD and momentum are not giving us the confidence. So that's where I would like to leave today's analysis. Well, friends, with that, I would like to end this video here, and I'll catch up with you in the next video. I hope you have a good time. See you later. Bye for now.